Hello everyone, Anna Bratkovic from the MFAA here. Thank you for joining us. Today's webinar is brought to you by Adam Grock, founder and CEO at Sherlock. Adam's presentation will cover key reasons why existing clients leave brokers and what they can do to prevent this. A recording of this webinar will be uploaded on the MFAA Learning Hub, so don't worry if you miss some of Adam's statistics and key details, you can watch it again. Over to you, Adam.
Thank you very much, and also thank you very much for having me. I'm extremely passionate about client retention and helping brokers with client retention, and also shifting the views on client retention, because I think there's some really great insights and deliverables from this that brokers can action and brokers can actually execute on to increase client retention. And really, what we're trying to do is shift the view on client retention, that it is prospecting. Client retention is prospecting, and it should be a daily or weekly routine. Now, where I'm speaking from, I'm speaking from a perspective of a broker. I was a broker for 12 years. So I was a mortgage broker for 12 years. And during that time, as I helped more clients and my trail book got bigger and we put on staff, I realized there was two things that was a problem. One is that like client retention just wasn't easy. And if something's not easy, you're less likely to do it. That's like basic human behavior. It just mentally, it's too hard. I won't start that, or I'm too busy. You make excuses and you just go, well, I'll get to that when I'm quiet, right? So the other one is that to actually then do it, it wasn't easy, but to actually do it, I couldn't find a scalable, cost-effective way to service my existing clients and retain them. And this is probably one of the things that this is what drove to Sherlock. I mean, I had a scenario where I was losing clients. I was losing high quality, good quality clients that were refinancing to someone else. So when I say losing clients, I'm not talking that they've sold their property and haven't purchased again. I'm specifically talking about they've refinanced with someone else. And quite often, I'd actually go through and call them and I'd say, well, why'd you leave? And they said, well, actually, I didn't even think about going with you, which meant our marketing, our customer care, our ongoing existing client service wasn't getting cut through. Now, we were doing it, but it wasn't getting cut through because inboxes were full. And also, we realized we weren't adding significant value. We weren't exchanging value at that point in time. And I'll tell you what you need to do to exchange value and be proactive with client retention. And we also realized that the number one reason that they were leaving is they were just going, well, I realized my interest rate was too high. You got me a great rate with a product that suited my needs and you were fantastic. And the service when we dealt with you initially was great, but I just didn't think of you. And then all of a sudden our interest rate was high. So we took the path of least resistance to go and refinance. Now, a lot of brokers, what we found is a lot of brokers go, oh, my clients are always going to call me. But the reality is, and the data and the trends and all the research suggests that they're not going to actually go and talk to you first. So what we're trying to encourage is, look, you need to focus on client retention. This is coming from a place of experience, and all the brokers that are using Sherlock across Australia, and also all the brokers we talk to, there's a couple of things they say. They go, I know I should be doing this. I don't have time to do this. My trail book is my existing clients is my largest asset in my business, but also my laziest asset. And so we're trying to just shift the paradigm, shift the mindset of brokers and the industry to go, retention is prospecting. I'll give you some key things in this session to really take away and action within your business. And I really want to make sure there's key takeaways that, I value your time. You're giving up your time now to watch this, that you've got something as a key takeaway that you can execute and implement in your business straight away. Now, one thing, one of our brokers, one of the brokers that's using Sherlock said this, and it rings so true. It's easier to retain a client than try and find a new one. I mean, it's so true, and for so many reasons. So some of these reasons are, one, you've already got the trust. They already trust you, and what clients exposed to brokers during that process in terms of data, the personal connection, the trust is significant, and you've already got that. So you need to focus on, your existing clients are actually your lowest hanging fruit to help. They're the easiest clients you can help. You've got the trust. You don't need to go and build up that again. When you first did their loan, you probably spent 12 or 20 hours on that original application to get that done for them. right? Don't let that go to waste. I mean, like, that is a lot of time. That is a lot of effort. That's a lot of cost of your time, your team's time, your overheads to actually get that deal done, right? So make sure that you can retain those clients for as long as possible by having high value exchanges with them and proactively retaining them. Right? We'll tell you sort of what you need to do. The other thing is you've got all their data. You know, we all know how difficult it is to go through and collect, you know, do a fact find or a client needs analysis to collect all that data initially. If you've got that, it's a significant easier process if you did want to refinance them, right? We always encourage like retention first. Retention, reprice first keeps everyone happy. But you need to offer refinancing and have that discussion about refinancing if there's a better rate in market. I mean, brokers are now under best interest duty. You have to have these conversations with them. So if you've already got their data, it means that that's a much simpler, streamlined, simpler solution for your existing clients. Another thing is quite often a broker may have paid for that lead, whether a referral source or an online lead generation. That's a cost of doing business. So you've already got that. Don't let that go to waste. Make sure that you're looking after your existing clients. What I'm really going to show you is, look, we understand a problem. There's a problem. What is the way that we can actually then find a solution? And I'll jump into that now. With anything, I'll just sort of set the scenes here. As with anything, if you're going to go, well, what's a solution for successful client retention? You need to go through what we call a learning cycle. And this is going to set up essentially a basic understanding of how you should approach the problem of, you know, client retention and scalable client retention. And that starts with understanding. So you need to, first of all, understand why clients are leaving or why clients are likely to leave. Then once you have an understanding of that, you need to go, okay, well, what is our plan of attack? What's our game plan to make sure that we can actually retain these clients? Now, I say retain these clients, other people might use words like service these clients or create a client for life. It's all talking about exactly the same thing. How can you make sure that this client is going to be with you, their trusted broker now, tomorrow, and in the future? Once you've got a plan though, like, a plan's great, but as we all know, you need to have an execution strategy behind that. And so that's what it really comes down to after that. So understand the problem, let's build a plan, let's execute on that plan. And that is actually how you come up with a solution around client retention. Now, what we talk about in terms of understanding, you need to understand as a broker, there is a common problem across the industry, which is what we refer to as a leaky bucket syndrome. So what this is this is essentially, you know, brokers, brokers are very good driving new business, and brokers over the last 18 months have been the busiest that they've ever been in their life, which is incredible. Now, filling a bucket is fantastic. So filling a bucket with new clients, with new applications, it's growing your loan book if you're not losing those clients out the back, and that's the leaky bucket. So there is no point in growing your loan book with new business every single year and putting on 30, 40, 50, $100 million worth of new business if you're losing that straight out the back end, because that is hard work. You're going to get exhausted, and that is not building a scalable business model. And also you're losing significant opportunity with your existing client base. So we're all about looking at this and going, well, if you've got this leaky bucket, how can you plug that? What are your plans and your execution strategies to actually stop clients leaving you, not stopping them by forcing them to stay with you if they don't want to, but proactively making your service and your value proposition to that existing client enough to keep them happy and turn them into a lifelong client. Now, a scary figure that, and this is a figure by the MFAA, is that trail book drop-off is reported at 15% as an average across the country. So if you think about that, let's say, for example, your easy number, you're generating a trail income, an annual trail income of 100,000, you're losing $15,000 of trail commission every single year for clients that leave you. Now, 15% is a significant number, but we actually see that with interest rates rising and also with refinance activity increasing, the data is suggesting that this is going to become more of a prevalent problem over the next 2 or 3 years, and is most likely, almost certainly going to increase above 15% if brokers aren't proactive with their retention strategies. Now, another figure, which is a scary figure, is that for every single client that leaves a broker, it costs them on average about $7,500 in lost revenue for that client. So that's 5 years worth of trail commission that broker would have received, and also the upfront commission they would have received if that client refinanced. So what I'm talking when I talk about a leaky bucket is the lost opportunity where that client has actually refinanced away from that broker and they've refinanced to someone else, which means someone else has collected an upfront commission if they've gone to a broker or the lender's collected that, and also they're receiving the new trail commission for that new loan. So that is a missed opportunity for brokers that actually has a value of $7,000 on average, $7,500. Now, the other thing that we're seeing, as I mentioned before, is refinance activity is increasing, it's significantly increasing. So you look at this graph up until February 2022, I mean, both across owner occupier and investment loans, it's almost actually pegged consistently against each other. But what you're seeing is that from, it's pretty much tripled in the last, don't even have to go back 10 years, but it's almost doubled in the last 4 years, or it's actually probably doubled in the last 2 years. And over the last 6-7 years, it's actually tripled. And we're expecting, with rates rising, with refinancing automation coming in and getting easier to refinance, where we are predicting and expecting, and I would say you guys need to actually be aware of this, is that this is going to keep increasing. This spike here is not just based on lender cashbacks or incentives for refinancing. That has a significant play in driving up refinance activity. But what you're going to see is you're going to see a property market that's going to start to slow. Now, I've always loved, when I was a broker, I've always loved the fact that you've got a two-tier market. You can go to a hot property market, you can go to a first home buyer market or an investor market, that's great. And then you can switch to a refinance channel and really drive more refinances to have a two-prong approach to driving the next phase of growth in your business. We're seeing that the property market's already started to show some signs of slowing, which means the refinancing activity, there's going to be more competition. The lenders are probably going to incentivize customers more for moving. It's going to be easier to refinance. So you need to be prepared that refinance activity is increasing. So some of the facts that we know, and I always like supporting any of these sort of claims or what we're predicting by actual facts. Now, this came out of the ACCC report on home loan price inquiry that was done in 2020. So it's actually still relevant, but the facts were over 80% of home loans have higher interest rates, right? So 80% of home loans, current existing home loans in the market, have higher interest rates than if they were going to be a new to bank customer. That is actually a reality, a proven fact. Fact number 2 is the longer you're with the same lender, the higher your interest rate is, right? Now, we all know this as brokers. An existing customer is going to be on a higher rate than a client who goes and refinances to a new lender now, or someone who purchases a property and it's new money to that bank, right? So the reason why I'm telling you this is if you understand the facts, then what you can start to do is actually start to understand what the problems might be and how you can address those problems. What we've actually also found is that uncompetitive interest rates are the #1 cause of client churn for that client refinancing away from the broker. So what that means, if that client's always on a competitive interest rate, that significantly reduces the likelihood of that client leaving a broker. In simple forms, it actually takes the financial benefit of refinancing to anyone off the table, and that client doesn't actually then enter the process of exploring other options. It doesn't go through a discovery online to do quick comparisons and see what other competitive offers are being offered. But even if they did do that, I'll come back and go, do you know what, I'm actually on a really good rate, so I don't need to do anything. So this is really critical from the understanding perspective. Now, to back this up, because I really like to, go, well, they're the facts, and this is actually is how this actually looks. So this is again from the ACCC report in the home loan price inquiry. So this top one here, so the top left in the light blue, that graph is showing that the 2.6% line is what customers would get on average if they were a new to bank client. Now, the top left-hand side is that after just 1 year, those clients, the average existing clients, are on 2.91%. After 1 to 3 years, which is on the left-hand side, which is the second graph, the one in the middle, they're actually on 3.9% when they should, if they were a new client to the bank, be on about 2.69%. So that's a significant difference after just 1 to 3 years. 3 to 5 years, which is the one in purple, they're on average at 3.2%, their interest rate, compared to 2.69, and it just gets worse and worse after 5 to 10 years, and then 10 years plus, where it actually goes out to over 1% that those existing clients are paying an interest. So this is really just to say that what I'm saying here is actually based on data and insights and facts, right? So we're not just making this stuff up, and it's really important for you to see that. Now, that's from the ACCC report. What I'll also show you now is what we see from our data, right? So data drives our business. And so what we're seeing here is this orange line is actually the average interest rate that those existing clients are getting when Sherlock's monitoring these clients' loans and their interest rate. That's the average, is the orange. Any blue dot above that line is where clients are paying too much, and every dot below that line is where those clients are paying less than the average. All right, and you can see some of these, you know, after 2020, you can actually see a bit of a flat line at the bottom to 2021. That's when people were fixing in at low fixed rates, because that was really hot at that point in market. But what's concerning, and what we're seeing from the data is that this is actually confirming what the ACCC found, that over time, people who are existing clients are paying more than what they should be paying in interest rates, right? So, and it really just supports everything that brokers know. Now, the reason for all of this is you understand the problem now. The problem why a client leaves an existing broker, the number one cause is because their interest rate is uncompetitive, right? They may have loved your service. There's other factors that come to that. Maybe you haven't spoken to them. Maybe you haven't had proper drip campaigns or email campaigns that keep you front of mind. All of that is supporting activities to stay front of mind if they decided to change. But the reality is if they're on a competitive interest rate and they went and even looked at the market to see what was on offer, they're not going to move and refinance. They're very unlikely to refinance away from you as a broker if they're just on a competitive interest rate. Now, we know that, so then it comes to planning. Okay, so what's the solution? We understand the solution, we now need to go into the planning. So what we say, and I'm going to give you some useful tips here, so make sure you've got a pen and pencil ready if anyone does that, or keyboard, because I don't know how many people have a pen and pencil these days. But what we're looking at is client retention routine, and we bang on about this to everyone. Make sure you've got a proper client retention routine. What we consistently see across the industry is that brokers are really busy with new clients, brokers are really busy in general, and brokers are asked to do more than they've ever done post responsible lending, post Royal Commission. Brokers have to do more of the processing. Brokers have more work to do. It takes longer to do a loan. There's more hours involved to process a new loan. Now, what you mustn't forget is that client retention should be a daily, weekly activity, and there needs to be a routine put in place. Now, how do you build a good client retention routine? So this really comes down to what we call the top performer mindset, or the top performer triangle. So the top performer triangle is really three key things that every broker or every business needs to make sure that they're addressing these, right? First of all, is we're really encouraging brokers and the whole industry to go shift your mindset around retention, right? Change your view around retention. Retention isn't something that you just get to when, oh, hey, we're a bit quiet now. We should go call our existing clients and see if they want to do anything. That's a reactive approach to retention, and that's going to put you at risk of losing existing clients. What you need to do is you need to shift that to proactive. Shift your mindset to, and what we're encouraging is shift your mindset to retention is prospecting. Retention retains a great relationship with your client, which then means you're going to retain that trail income, and you're also going to actually then uncover extra opportunities to help that client with their needs, which in some cases will result in a new refinance or new revenue for your business, or an increase to help them with their renovations, or whatever that might be. So really, we're saying the first thing you need to do, and the top performer triangle is actually balancing on mindset. You need to make sure you get your mindset around retention up to speed with retention is prospecting. Retention is a daily non-negotiable activity, right? Then what we do is skill set. Okay, so what is the skill set that you have within your business? So what is the skill set you as a broker, or you as your admin team, or your support teams? Do you have the right skill set to reach out to your clients, to proactively reprice them, to proactively ask them questions around, what are they doing over the next 6 to 12 months, right? So make sure you've got the skill set. Now, the answer to that is majority of brokers will have that, because if they're doing the right things up front and they're able to convert deals, then they're going to have those people skills and those conversational skills. So that should be a big tick. What we see is once mindset's been changed, the skill set is essentially a given. We know that the brokers have that. But the key thing that we see where this starts to fall away is the structure. Now, what we always say is, what is the structure that's going to get this into a daily or weekly routine? So the one thing I would encourage every single person to do, which if you only take away one key takeaway from this webinar, is you need to have a non-negotiable client retention block-out time in your diary, whether it be even 30 minutes per day, where you just called the next 5 clients on your list and had a conversation with them, a high value exchange conversation. I'll go to that in a bit more detail afterwards, but you need to make sure you've got this as a non-negotiable activity in your diary. It could be once a week, it can be daily, but just making sure that whatever it is you're doing, that you're calling your existing clients, you're looking at your retention strategies. This structure is actually going to be the #1 thing that helps you do successful client retention strategies. Now, in terms of shifting mindset, so the key things with shifting the mindset, and again, the top performer triangle balances on mindset. So what you really need to do is you need to focus on your existing clients. Now, the whole mortgage broking industry, mortgage brokers are salespeople. They're very good salespeople. They're very good people, right? I think the mortgage broking industry is a fantastic industry with great people in it. However, the industry has always been focused on how much new business you write, how much volume you write per year, right? Absolutely. If you're a new broker starting, it's all about leads, leads, referrals. It's how much business can you write to make sure that you start getting some really good traction as a business. But as we know, the longer you're a broker for, and normally this sort of starts of 2 years plus, where brokers start to see retention, either like early warning signs of retention issues within their business, or the problem of, okay, well, how do I now service all these clients that have built up over the last 2, 3, 5, 10 years? So the fact that brokers, what we're trying to do is we're actually trying to shift the messaging in the industry and go, okay, look, yep, you have to focus on driving new business, but that's not the only thing as a broker, because a successful broker doesn't just have $1 million that new business they're writing every single year. They're actually keeping all the existing clients, or 99% of the existing clients that they have, right? That is a much better strategy to attract new business and plug the holes within your existing clients so you're not losing them. The second one is making sure, when you're shifting your mindset, shift your mindset with retention to exchanging value, right? So what we talk about when we talk about exchanging value is, what's a high value exchange conversation you can have with that client. Now, I'll give you an example. If you're a broker and you call a client and you say, hey, look, we want to review your loan, right? Put your customer hat on now. So you're your client and you receive a call and they say, hey, look, we want to review your loan. It's like, okay, cool. One, I don't know what review my loan means. Didn't we do this? We only just set it up a year ago or 2 years ago. Do we have to do this? There's no value that's been exchanged at that point in time. So what we say is, we say flip it, right? Proactively reprice that client to a lower rate. Then your phone call is completely different. So you're calling your client and saying, hey, look, I just want to let you know, we realized your interest rate was too high. We've actually proactively repriced that and you're on a lower interest rate and we're saving you about $1,200 a year in interest. There's nothing for you to do. It's just part of our ongoing service. A completely different call, and that's a high value exchange, right? You're giving them something unexpected proactively. That is going to win you more customers for life. That's going to build loyalty. And it's also going to build referrals, because they will refer other people, right? It's a completely different way to approach retention. What we also say then is, repricing reduces the likelihood of a client refinancing with someone else significantly. It's the #1 thing you can do, but then have other conversations around that. Okay, look, now that we've done that, that's part of our service, is great, we've saved you some money. Is there anything you're doing in the next 12 months that we need to be aware of? Are you looking at buying another property? Open up the rest of those conversations once you've already delivered value. And that's really important. What are you giving to them first? What would you expect your accountant to give you before they call you that is good news and delivered value to you before they start going into more of a structure and strategy conversation? The other thing for shifting the mindset, and I've said it, is retention is prospecting. I can't drill that in enough. Retention is prospecting. Make it a weekly activity. You have to get it into your weekly routine. It's an absolute must for successful retention strategies. Now that we've gone through that, we're going, okay, look, we've got our plan. Our plan is, I'm going to block out time. The phone calls and conversations I'm going to have with my clients are going to be high value exchange conversations. we need to and proactively reprice them. I mean, that should be something that every broker should be doing, because that removes the risk of that client leaving. It's the number one thing you can do. But now we need to execute on that. So this is exactly what a good plan looks like without execution. And this is probably the best example of the best laid intentions, the best laid plan. I know exactly what I have to do. I jump on a springboard and all I've got to do is get the ball in the ring, but it lacks the execution, right? So what we're looking at here is I'm going to give you 3 easy steps that are actually things that you can do right now. So so make sure you write this now, but the key things you can do to actually execute on this plan. The first one, you need to predict which clients in your loan book are at risk of leaving, right? It's the bigger your book gets, the harder it is to have a conversation with every single one of your clients on a 12-month basis about what they want to do. And the reality is your clients don't move in annual cycles. Their anniversary date of when you refinance them or when their property settles, they actually don't care. It means nothing to them. It actually doesn't. So what can you do to predict which clients are likely to leave, right? What I would say is if you didn't do anything else, look at your commission statement or the data within your CRM system, and I would just go, who's the client that's been on there the longest? So start with the earliest settlements with the highest loan amount and the lowest LVR, and then prioritize PAYG over self-employed. That is like the simple thing to do. Now that is a like somewhat intelligent way of approaching client retention. There are a lot smarter ways of doing it, but if there's only one thing you can do, I would start with that. Start really easy, and then just call 5 of those clients, work through that list every single day, and then make sure you're just working through that list. Reprice them, have those high value conversations with them. Retain them by lowering their interest rate. If we know that the number one problem is 80% of people paying an interest rate that's too high on their home loan, and the number one reason that they leave a broker is because their interest rate's too high, lower that interest rate so that is not a reason for them to leave you, 100%. Now, what we also say is when you're communicating that, and let's say you give them a call or you send them an email, make sure, a little tip is make sure that you send them an SMS to check with the good news and to check the more detailed information in the email. That gets a much greater open rate of the emails that you send out. Also, if there's the ability to save them more money, and we're sort of seeing around $1,000 per annum in interest savings is about the threshold that people will start actually moving and refinancing away from a broker. If they can save more than $1,000, make sure you have that conversation with them. Look, and don't have the conversation, again, what's the high value exchange? The conversation is like, it shouldn't go along the lines of, hey, look, I want to, I want to talk to you about refinancing. You're already talking to them. Say, look, I've actually done some quick calculations already, and I know that we can potentially save you $3,500 by refinancing. Are you interested in doing this now, or should we have a look at this in 3 months' time? Right? And most people will say, well, for $3,500, let's just get onto it straight away. So make sure that once you've repriced them, you're having those refinance conversations. Now, this is essentially how we've automated it. So Sherlock predicts who's going to leave the broker. We actually then queue up a list of the clients that you need to talk to every single week. And these are the ones that are most likely to leave the broker. And then what happens is you as a broker approve that. So you click approve, it goes off for the repricing, it gets repriced. And then what it does is it comes back from the lender. And in this instance, the lenders approve the reprice, and then you're actually choosing the communication that's going to be sent out to the client. So this is where Sherlock's, everything I've told you is the right thing to do. We've just happened to automate it. So you can see in there how much savings have been offered to the client by repricing. Also telling them exactly how much they should be saving, or they could be saving if they refinance, and an instant comparison has actually been put into the email. So that is a high value exchange for your clients. You're actually proactively predicting who's going to leave, and then you're repricing them proactively, communicating the good news. You're the hero because you've done the work, and you're also enticing them into a refinance if there's a better interest rate in market. Now, the number one thing from client retention is keep them. If you keep the client, everyone's happy. It's a win for you, the lender, the aggregator, and the customer, right, for your client. So retention should always be your first port of call and your first strategy. Now, to just bring this home, I mentioned refinance activity is increasing, right? And this is why brokers need to make sure they're doing something. Refinance activity is increasing, and it's only going to get more and more active as the property market slows. Also, we're predicting that trail book drop-off for brokers who are reactive in retention is going to probably double over the next 3 years to 30%. What is driving that? Rising interest rates, automation of refinancing, and when your clients go and look at what their options are, the research is suggesting that they are looking online first, and those online platforms are getting better and better and better at converting those clients, right? Converting your clients. The other thing for why we think that trail book drop-off is going to increase more if you're reactive. If you're proactive, you're not going to have this problem. Brokers have done an absolutely fantastic job of being, I'll just go back, of being a major player in the mortgage broking industry, in every single loan that settles. But what happens when you're writing 60%, 66% market share? That means that every client that is out there, every client that's out there that is thinking about refinancing, or an existing client, it's actually now more likely that someone is looking to refinance your client than a client from a bank that hasn't gone through a broker. So just think about that for a second. When brokers wrote 20% market share, it's significantly more likely that a broker's going to refinance from a lender, because brokers only had 20% market share. But all of a sudden, brokers have 66% market share, which is unbelievable and fantastic, and that is expected to grow, which is amazing. But that also means that as refinances are increasing, brokers are going to be refinancing from other brokers more likely than refinancing from lenders. So just think about that. This is just to really, it's not to scare you, it's really just to stress retention has to be a weekly activity for you, especially because interest rates are rising, especially because refinancing activity is increasing, especially because refinance automation is happening and coming, and it's going to be easier than ever for people to move. And digital players, neobanks, these comparison websites are getting better and better at converting, and broker market share is growing. It's fantastic, but you have to be proactive in your retention strategies. Look, hopefully there's some key takeaways in that. I really wanted to give you some things that, whether you use Sherlock or don't use Sherlock, we're just trying to change the industry to focus more on retention, because retention is a key thing for brokers. And we know that high interest rates for existing clients is the number one reason they leave. So reprice them, tell them the good news, and the brokers will look like a hero for that. So if you have any questions, I'll respond to them after this webinar. But if you have any questions, make sure you just, hit me up, LinkedIn, email, just feel free to contact me. I'd love to have this conversation. Even if you want me to come in and talk to your teams about it, absolutely happy to talk about retention strategies and what you should and shouldn't do. And also, if you wanted to try Sherlock for free, make sure you scan that QR code and you can jump on and have a look. Thank you very much for your time.
On behalf of the MFAA team, I'd like to thank you, Adam, for your presentation. Today's webinar will be uploaded onto MFAA's Learning Hub. So if you missed something, you can watch it again. Today's webinar will earn you 1 CPD hour. Thank you for participating in MFAA's continuing professional development. Until next time, bye for now.